Good morning and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. So the first thing we'll open the webinar with is an introduction to AvaTrade. As many of you know, we're here since 2006. We have 9 licenses worldwide. In case you got a question along your journey, you can find our customer service right here at the bottom left. You can either chat with us or you can use the WhatsApp. Or if you're using a different interface, you might as well contact us directly through cs@avatrade.com. This is everything's related to the customer service queries, which you can address. Regarding trading, you can have a senior account manager to give you full support through the process. Of course, if you don't have a senior account manager yet after you've made a deposit, you can again contact the customer service to ask for somebody to be assigned. It's super effective. A senior account manager can assist you with everything under the trading umbrella in terms of calculations, in terms of risk money management, maybe analysis tips if you want, and so much more. So it's something that you can use that can be helpful. As I said, we're going to have today the webinar on the web trader. The web trader is embedded in our website. You can easily access it by logging in with your email and password. If you're using the app, it's called AvaTrade's Trading App. It looks quite similar. It has similar nuances, which also the features that I'm going to show you today will also be found on the app. Naturally, it would look a bit different, but still, you can use it. And I also want to write down the other platforms that we have, just so for people to know that we have them. And I would like to say that both MT4 and MT5 interact with the web trader, which allows me, if for instance, I want to do the analysis here, because in here I have so many tools and things are calculated for me. We'll speak about it later on as we move. And for any other reason, what I can do is I can use MT4 and the web trader, and I can do the analysis here and maybe modify an MT4 and vice versa. Same apply with MT5. Do consider that MT5 and MT4 requires separated sub-accounts. Okay, so in terms of the platforms that we wrote down, which I'm sure people with a bit of experience are familiar with, on top of that, we have AVA Futures, and we also have AVA Options. And the last thing that I'm going to jot down will be the AVA Social. And the reason for that is because I want to speak a little bit about AVA Social and to explain that with AVA Social, you have two main functions that can be very effective as a beginner. So one of them is copy and the other one is who knows. The other one is follow. And usually I put it the opposite because I believe you don't have to do it this way, of course, but I believe that maybe following a trader can indicate a bit better before I want to copy to its full extent. And we'll also speak about the differences. So let's suppose that we are trader A, just for the sake of the discussion, and we would like to follow trader B, just as an example again. And in this case, let's say trader B has a strategy with what we have here, with Aussie Canadian, and I am trader A. I still don't know exactly what I'm planning to do. So what I can do is I can follow trader B, and what will happen in this case is I'm going to get notifications with the position that trader B took. This way I can interpret the message and maybe open the position the same way that trader B has done. Maybe I can also modify, take it as analysis tips, and maybe use it as an additional layer on top of my analysis. But the point here is showing you that follow, the function itself, is providing information but does not provide automated trading. Copy, from the other end, if we'll take it as it is and simply replace the follow with copy. So this process, what it does is it allows you to trade automatically based on what trader B is doing. So follow, we said we're going to get message, we're going to get a notification, and we can do it the same way. Copy means that we're actively, automatically opening positions based on what trader B is trading. On top of that, what we can do is we can also modify the lot size. That means that if trader B has an account of, let's say, just as an example, $25,000, and we are, as you can see, currently with $10,000, of course, it would make sense that trader B can take a position that our account might not be able to. Okay, or maybe in terms of, please zoom out your screen. Okay, anyone else has an issue with my screen? Let's see. Maybe. Okay. I don't know what you mean by that, Mr. Thomas. If you can explain what's missing on my screen, that will be great. Okay, but at the moment, I hope that everyone else can see it properly. But at the moment, as we see, the follow functions provide us with notifications. The copy functions is actively allowing us to automate the trading. We can stop it in any given time, and of course we can go to the history, go back, and just simply review what happened on the account. So we can do it in any given point. And on top of that, as we said, we can also modify the lot size, which gives us much more control on the risk money management applied on the account. The app itself is completely free, so I highly recommend you to download, whether if you're a beginner or not. All right, and now we can proceed with the menus to the left. Of course, guys, people who know me and was on my webinar knows that I'm moving in a certain pace, but if something is not understood, it's a live webinar. You can stop me and I'm happy to explain. If there are any questions until this point, feel free to fire away. I'm going to speak about the menus to the left. We're going to close that guy down. We're going to speak about the menus that we have here and see which one can be useful for us along the journey. The first one here is just my personal details. In here, I can also create a sub account. In here is where we are. Sometimes it looks like this, but you can easily click on the arrows to expand or minimize. Underneath, we have the positions. Underneath, the orders, history, we just saw that. We have the signals. Let's click it, and we can easily learn how to use signals in less than 3 minutes. The first one that we see at the top is Dow Jones. We have some parameters in here. The first thing is the symbol, the name of the instrument we're trading. Second thing is the type. That means that out of 2 scenarios, buy and sell, we have a sell. We'll speak about it and understand what it means. Stop loss and take profit are both pending orders. Pending orders, apart from other orders, are pending orders, okay, triggered when reaching the designed price. Okay, that means that both stop loss and take profit are automated orders, and it allows us to automate a position to close automatically with either profit or loss. And this is exactly what the signal does. This signal is analyzed based on certain levels of support and resistance. Based on those levels of support and resistance, let's extend the chart. We can see some lines here. We don't have to dive too deep into that, but we just want to get our heads around the idea of what's happening here. So there is a certain price. On top of that price, some analysis was done by Trading Central, and it comes to us in the shape of a signal. How so? Because based on those levels, there were 2 pending orders, which, as I've explained, are triggered automatically, and it can also close based on those levels. So now if I click on sell, you can also see that it's displayed down here as well, yeah, the support and resistance. We'll speak about it in a moment. We'll see what it means. But currently, we're just clicking on sell, and we see that with the sell, we have already the levels. We'll fix the levels here. Don't worry, I'm explaining everything that I'm doing in a moment. But at the moment, I just want you guys to see what's happening here. So we've got two values automatically from the signal without us doing anything. We just click sell. And okay, we'll place the other one. The reason that I've placed the green below is because this is a sell type. We spoke a minute ago about having two scenarios, a buy and a sell. When we are buying something, our intention is that the value will increase. But currently, using the sell scenario based on what the signal suggested, let me show you that again. We clicked on view signal. We already see that the levels we have in here are the levels from the outside. So those levels have been placed for us automatically. So we're going to try again. Click on view signal. Second click is to already use the signal, and we are good to go. And with those levels, as we can see, the green line help emphasize where the position is going to be closed at profit, and the red is with the loss. So if it gets down to 44,365, we're going to make $87. If it goes up to the red line, we're going to potentially lose $46. Of course, this can be modified as well, and we can reduce the lot size to 0.01, and then the profit and loss will change accordingly. We can also extend the lot size, and based on that, the take profit and the stop loss will change accordingly. Now, this is just a fun way to help you understand how the signal is working. But if I would want to take the extra step and maybe use the just maybe the CAC here is an example. So we can see France 40 doesn't have the take profit and the stop loss. So if we're going to try and use it similar way we did with Dow Jones, it's not going to allow us. Now we're going to still click on buy to try, and we're going to expand the screen, but we're going to see that nothing happens. And the reason is it's already written to us in a message here. The market has already reached a key level. Okay, so let's break it down and understand the signal section before we move on. There are listed here instruments, signals with analysis as we spoke about. By the way, on your phone, if you want to receive the signals, if you want to receive them as notification, you must enable to receive notifications on your device in here. You need to click, you have a toggle on your phone, you have a toggle here, and when you enable it, you must agree, and then you can receive the notifications. Okay, so with this in mind, we've learned there is some analysis, there are some parameters in here, there's also two scenarios, buy and sell. There are also two pending orders. We can just select something else as an example. We can click here on crude oil. We can again extend the chart. We can look at the validity of the analysis, which is daily. And at the moment, we're looking at, well, daily, great. In this case, we can choose a scenario. This time we're going to go with the buy. And it's already ready for us to take profit and the stop loss. Once again, we can modify it accordingly, extend the lot size, maybe put the take profit a little far away. And here we are. So basically, this is super simple to use. On top of that, we can even place the line similarly, and we can do some analysis. In general, resistance will be a peak point at the top of a chart, and support will be the bottom. Of course, I'm going to explain more about it as we move along, but it was important for me that you guys will understand the concept so you know how to use the signal section. Again, as I said before, if there are any questions, feel free, guys, to fire away. We're going to carry on with the menus to the left. You can clean all the indicators in here by clicking on clear drawing. And if we go down, we can see that there is the new section right here. So we spoke about the analysis that was done here, which is support and resistance, and it's quite technical. So we have two types of analysis, as I like to write. We have technical analysis, and we have fundamental analysis. Okay, and technical analysis is what we saw just now, which is averages, statistics, support and resistance, and other levels that we have, basically technical and basically the how things are moving. And from the other end, we have articles, interest decision, and we have other governmental decisions, whatever you can think about, news as an example, God forbid wars, and so on and so on. And this will be the why things are moving. So a great explanation for that. Since Trump got elected, everyone saw how the market fluctuated. He spoke on the tariffs and things fluctuated again and again. So those are examples of fundamentals. The war in the Middle East, what we had. So those are examples of fundamental analysis. So we get the signals. This is technical analysis. How do we add this additional layer of fundamental analysis? So to get the news, there are several ways. The easiest way is obviously clicking on the news section. So like that, I can get articles as we see here, the pre-European market brief, and we can see that it's related to the New Zealand dollars and the US dollars. And if we go down through this article, we can see at the bottom of the article, there are 4 related instruments. In these 4 related instruments, we can see crude oil, gold, Bitcoin, pound versus dollar. That means that I can go through the articles, and at the bottom, it's simplified what it's related to. And then I can go directly to the market and do whatever analysis I need. So this is one way. We have categories in here, also provided by the Trading Central. And underneath, under Discovery, there is another question here. Are there any extra costs to follow a specific trader? Yes, explained on the app. Okay, so as I replied to you, Sigawane, each following or copying a trader has a certain cost, but it's explained on the app. Unfortunately, I cannot tell you in advance what the cost is or even a range. This is why I recommended to download the app. And okay. There is another question here from Mr. Saman. Are this live? Which? Oh, you mean maybe the webinar is live? If the webinar is live. Other than that, any questions, guys? Feel free to fire away. Okay, so we saw the news section. Great. Underneath, under the Globy icon, under Discovery, we have analysis views, market bus, forex features, ideas, economic calendar, and trading calculator. So before the end, we're going to look at the economic calendar, and what we can find in the economic calendar is very interesting. We have here several. Okay, we're going to click on the reset to reset everything. The news, yes, of course. Of course, you can also see when it was posted. Okay, I hope that it makes sense. Yes, and you can see the time stamp that it was published. Okay, now, so as I was explaining here, under Discovery, we've got the economic calendar, and in the economic calendar, we can see all kind of various things. Different. We're going to go through the columns, see what each means. So in here, we've got the time, country, and event. Based on the countries, we can filter what currencies we would like to focus on doing our analysis. In here, we've got the impact, importance, low, high, and medium. Next to it, we've got the actual, which is the result, forecast, and what happened last time. It's important to understand that when we see a grayish font and it's under the actual, we know that this event already took place. Another way to confirm that is if we scroll down and we see this red line separating the upper part, and we know that those events already occurred. Underneath, there are events that needs still to happen. But the problem now is there are too many of them, and none of them, maybe some of them, are not really relevant to our analysis. So if we would like to take out only the countries that we are analyzing, let's suppose we are focusing on the Aussie and maybe the Canadian dollar. So we only selected Australia and, oh, sorry, that's Canada right here, and Canada, and we see that there are not a lot of, there only one for Canada at the moment. There is another question here. Here's a question coming from Alex. When you were in order menu, there was a leverage 1 to 5. Can a number be changed to 0 if a trader does not want any leverage? See if these are contract for difference. Typically, okay, which is based on leveraged trading. I'm just typing you an answer, just a moment. Okay, so what I wrote you now is that most of the tradings that we do in this account, which is a CFD account, are leverage trading, and your leverage cannot be changed unless you make a special request to your senior account manager and make a specific request, and even then it's more likely that the leverage will not be changed since the leverage is dictated by the regulation, okay, based on the account citizenship and so on. Now, as we saw right in here, we can filter out the countries that we want, the Aussie and the Canadian dollar, and then we can proceed only with what is important for us. Now, the reason that we're not seeing too many events is because only today is selected. But if we click on today and we click again on the 23rd as an example, we see a blue trail going from this date to that date. And then we know what dates are selected. We can see that today is just this paragraph, and underneath we have another paragraph for the 10th, the 11th, the 14th, and so on. And now we can pinpoint what events are important for us, and we can specifically design our strategy if we want, based to do the analysis on those events. Another nice way, instead of remembering what date was it and what was the specific events and what was the specific numbers, one of the things that I like the most in this economic calendar is the feature right here at the tiny icon, which is add to calendar. And if I do this, now I can book the event into my calendar, and instead of thinking when the event is going to take place and to prepare myself, I just book it on my phone and I get a message, and I can directly get a reminder and do the analysis, which I think is great, and I recommend. Apart from that, we went through filtering. If I want to erase everything, so I can click here on all countries, then click again. Sorry, maybe in here first, and then in here. Okay, and now everything is on. Okay, we can reset in here. We can also filter to high impact only, and then only high impact event will be, but the rest is on you guys. I am sure that you can explore and enjoy the economic calendar. Okay, so I know you guys been waiting for the second segment, the practical part, and now it's about time and we can begin to get down to business. We have a question from Donald here. Hey, can we have the recorded session afterwards? Say via email. You can send it if you go to our YouTube channel. You can find the link of the YouTube video and you can send it by yourself on the email and then you will have it sent. But unfortunately, I'm not sure that it's possible to email to your the recording. But the solution I gave, I hope that it's simple enough. Okay, so we finally get to begin the second part. We're going to click on the AvaTrade to go back to the default screen. Click here on the two arrows to fold it down, and we can select an instrument to begin with. Of course, as I said before, any questions there are, feel free to fire away. At the moment, we see we have here several categories. Also, we have here categories, which is great. And we see if we click on one of the categories, it scroll down a subcategory, and inside we can click on one of them and maybe just select corn or maybe or coffee. And then with coffee, we can click in here on the arrows to extend the chart. Click here on the column price, squeeze it down, and then scroll out with a wheel on my mouse. And as an addition, we're going to click on 1D. We're going to switch to W1. Now we have a very nice picture of coffee just reaching to the support line. As we saw before, there are two levels that we can capture, and with them, we can have a certain area to analyze. Using by those price line, we can, you see I click and I drag, and similarly the timeline as well. We can also click on the line and we can click on the white wheel and we can change the coordinates if we want a specific price to be, and then it will go to the specifically to the price. We can do the same thing with the price at the bottom. So let's make it 245. Great, and great. Now we'll begin with going from left to right. In here, this is actually a search bar. I can delete whatever I want, change the instrument, but keep in mind, if I do this, let's click buy or sell to enable the order entry. And in here, we can delete the gold. Okay, we'll type gold. And in here, we can click on gold. There is a question here. Please, how can I connect or integrate my AvaTrade account with TradingView? At the moment, this function is unavailable, but if you check in the future, it might be. I don't have a specific ETA to give you, but keep checking from time to time, and maybe eventually it will happen. This is available only for futures at the moment. Now, if we're looking at coffee and we're seeing that coffee is somehow in the middle of the area we've captured, and it's gold is right in the middle of the area that is captured in here, but coffee is displayed. So make sure that if you're changing in here the name of your instrument, you also change it in here. How you do it? You just click buy or sell, and it's displayed correctly. So again, if we switch back to coffee and we select it from here, it's still going to be gold. So we must click buy or sell to change it to display the right one. Now, when we're looking at coffee, it seems like coffee is heading right to the support line. This is the support line that we've captured. This is where coffee is at right now. And we see if we use a channel here, we can click on the top, click, and drag down, click and drag it up. We see that the general trend is bearish. So with this in mind, if I would want to target this price as an example, let's say 245 from where we are, first of all, I need to click from buy to sell. This way, our intention is that the value will decrease. Great. Another thing that I would like to do is to click on the lot size, change it to 0.01, and then we can carry on with ease. So we saw the search bar, we saw the time frames, we keep going right. We have here to change the shape of how the chart looks like, if it's a candle or line or bars. In here we can also enable from no crosshair to crosshair, and with no crosshair by default there are no numbers coming from the chart. But if we enable the crosshair, then we do get the necessary data. And with this, we can also change the layout to split the screen, maybe to 2, 3, even 4. Great. And if we keep going to the right, we have the indicator and all the fun things that I've placed on the chart. We can even leave a note if we want, and so on. Now, from this point, how can we make it useful? So first of all, I would like to enable all three boxes: execute when price hits, take profit, and stop loss. Now that we have three of them enabled, we can automate the position. There is another question in here: how long can I study for one level and get certificate? Only God knows. Only God knows, Mr. Shayaka. That depends on you, and to be honest, it's a very dynamic question. You need to maybe give it a try and see how long it takes. That depends how dedicated you are and so on. Okay, so we'll put the name of the instrument in here, which is coffee. Okay, and from coffee, since we think that this is a sell scenario, we'll also write here sell. And we're also going to write the definition for those boxes that we enabled. So we got execute when price hits, okay, equals trigger by reaching the price and launch the position. Okay, so that is maybe open the position will be more appropriate. So, and opening the position. The second thing, take profit, we spoke about it briefly in our, when we looked at the signal. So triggered also by reaching the price, closing the position with a profit. And I'm going to write almost the same thing for the stop loss. So we've got stop loss. Now, how is this helping us to automate a position? Since those are, there we go. Since those are pending orders, they will be triggered reaching the price. So it doesn't require me to be on the chart at all once I've designed it the way that I like. So in the price, I'm going to flatten that price out to 285. This way we get flat numbers instead of fluctuating numbers. And the take profit, since we saw that in a sell scenario, we want the value to decrease, I'm going to turn this one green, I'm going to turn this one red. Now we have, just as an idea, what scenario we're working with, and generally the area that we would like to focus and capture in our analysis. And now the take profit, we're going to change it to the green line. Of course, we're going to validate this and see if it's something we want to work with or not. But at the moment, I'm just placing the numbers. Of course, it looks terrible because we haven't made any adjustments. Now, if let's maybe add another line in between, because the red line seems a bit far away. And at the moment, between the entry to the take profit, there is $40. So we can use the same ratio and make it 2.8. Sorry, maybe edit with a calculator. So we plan to enter as at 285, as I wrote here. So execute when price hits is triggered by reaching the price and open the position. This guy right here is going to open the position. So that's 285. I'm going to write here entry 285. Take profit, we said 245, that's the green line, and stop loss is going to be $40 away, which is 320 So we're going to do 285 plus 40. Okay. Why did we do the plus? Because in a sell scenario, if it goes higher, we are losing, and if it goes lower, we're making profits. No, I have no idea, Shiaka. I've absolutely no idea, unfortunately. Okay, so with those numbers in mind, let's also fix that to be the right one. Okay, with those numbers in mind, the support and resistance, again, resistance is the ceiling, support is the floor. So with those numbers in mind, we have some progress, but still we're not sure. We're looking at here, it seems like $400 from moving $40 away. Okay, so let's break it down. Our entry 285 and our take profit is 245. That's $40 away. So from here to here, we're looking at $40. The green rectangle is $40 long. And the red rectangle is where we've placed our stop loss. Okay, so the stop loss is the red area. The take profit is the green area. And now we want to validate that the price that we choose is realistic and not too far away, or maybe we can even adjust it. But how is this possible that we're making $400 with 0.01? The reason is because the lot size for coffee is 1 to 1,000 and not 1 to 100. So 0.01, which is 1% of 1,000, is 10. This is why when we have 10 bushels, 10 units of coffee, 10 times 40 gets us 400. Great. So we're going to write a couple of things to help us construct the position with a bit more logic. We're going to also set the target, which will be $1,000. We'll also think of a reasonable time to hold this position, which I think 1 week is pretty good, maybe even 2 weeks. Okay, let's stick with 1 week and then we'll make the necessary adjustments. The next thing I'm also going to write down is the movements, which we still don't know. And lastly, the units. Now, if we're looking at $40 away, we want to somehow validate that $40 away is really something that we can achieve in a time frame of a week. We can do this in several ways. One of the ways is just to investigate what happened last week. Okay, we see that last week the open, I'm just pointing on the candle, I'm not doing anything special. On the 30th, a week ago, the values that we had are opening of 302, open 302, close 287, high is 307, and L is 279. So we've got the open and the close figured, and we've got a high and the lows figured, but this only gives us the difference of what happened last week, and it doesn't provide us a neutral valid average based on previous fluctuations, only on one single week. So to do this exercise I'm currently doing, subtracting the open from the close and the high from the lows, to do this with a large number of candles, let's say 20 candles or 30 candles, it will be a very, very time consuming exercise. But if we could have an indicator that we can just select how many candles we want to analyze and withdraw the average from, this could be great. This indicator is called average true range, which based on the selected sum, let's calculate an average true range. This means we can just click here on the indicators and type the filter. We're going to type AVE, click and drag it to the right. And now all we got to do is just to select how many candles we want to withdraw the average from. And based on this number of candles, we're going to get the average. So let's count together. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 14. So this is how far away it gets. And it's precisely until the previous segment. So I'm going to leave it as it is, just changing the color here. Maybe make it yellow and maybe like this, click save. Great. So we see that coffee has tendency to move $27 per week. ATR equals 27,866 based on 14. Great, great, great. Now we have something to work with. So we know that it's moving 27, but we aimed $40 away. Okay, now let me ask you guys a question. Since the range is $27 and we're aiming $40 away, is our goal too far away or is it in the range? Guys, I'm gonna repeat that. I'm gonna repeat, range is 27,866. Target, the gold price equals $40 away. So is it in our range or is it beyond our range? It's more than the average. I'm going to give you guys 10 seconds to answer, and then of course I will reveal the answer. We've got the first right answer coming from Rob. Very good, too far away. Who else thinks that this is too far away or maybe it's in the range? Very good, Arif, it's more than the range. Great, so we've got two answers. Great, great. So as you saw by yourself, it's farther than the range. And since we targeted 1 week, we can do one of two things. We can either consider holding this position for longer than a week. This way, 27 times 2 is more than 40. Or we can adjust the levels. In this case, what I'm going to do is I'm going to adjust the levels. And instead of $40 away, I'm actually going to go for 25. So my so-called PAM, which is potential average movement, will be $25 away. So 25 instead of the ATR. I'm still going to keep the ATR here, just so I'll know what my initial reference was. But I'm going to write here, actual expected movements equals $25. And now what I'm going to do is I'm going to look at the entry. The entry is 285, and 285 plus 25 is for the stop loss. Remember, we're using a sell scenario. In a sell scenario, our stop loss will be in a higher point and the take profit will be in a lower point. In a buy scenario, this would have been the other way around. So if we subtract 25 from here, it will be 260. Okay, and now we're looking at $25 away. We'll quickly make the necessary adjustment with the levels here as well. And we'll maybe push that down a bit. This one, we'll also design it to be 260. Okay, and this one will be 260 as well. So we'll make it 260 like this. Okay, great. Now, at the current scenario, we'll also change this to be $25 away and $25 away. Great. Now, the last thing we need here to complete the composition is to get to the 1,000 we wanted and not 250. because by the way, we are at $250 instead of 1,000. So what we need to do now is we need to adjust the number of units to get to the necessary amount. So I'm going to give you a nice equation. If we go and divide a target by the movements, we get the units. So if we divide 1,000 by 250 is how much? Who knows? Okay, and then we can quickly change it accordingly. So we've understood that with 10 units over $25, we make 250. Okay, great. So if we divide a target, which is 1,000, and we divide it by the movements, we divide it by the movements, which is 25, we get 40. Okay, so since we are with 10, we can click here once. We are at 20, we can click here again. 30, we can click here again, and we are at 40. And now with 40, we get the exact numbers that we wanted. So we're looking at 1,000 versus 1,000, which is a ratio of 1 to 1. Great. Great. Okay, now it's 40 units. Since this is coffee, it's 0.04. Now, what I would probably want to do, if I would like to adjust the ratio here instead of 1 to 1 to be 1 to 4 or 1 to 0.25, okay, how can I adjust my exposure from 10% to 2.5%? Who knows? Or maybe let's make it even lower. Let's make it 2%. How can I make, okay, so the current exposure, how can I know my current exposure? What I can do, how to calculate current exposure. So we're going to go possible loss divided by balance equals factor, and then factor times 100 equals exposure. So we're going to go 1,000 divided by 10,000. That equals 0.01 times 100 is 10, right? So we're going to do it together. Sorry, that was not correct. There we go. Okay, and now we are at 10%. But how do we make it 2%? What we need to do is we need to divide this by 5. So if we're looking at $25 away, we can divide the reference by 5. So we can go 25 divided by 5. And instead of our stop loss to be $25 away, it will only be $5 away. This way, instead of, if the entry is 285, instead of 310, it will be only 290. Now, at the moment, we're not getting into if it's too close or not. Okay, this is something else. There are other ways to overcome that. But at the moment, what we achieved is the ratio that we wanted. And with this ratio, we can see that we can either make 1,000 or we can lose potentially 200. How is this helpful? Who knows how is this helpful to adjust the ratio to something like that instead of a ratio of 1 to 1, which we had initially? Anyone has any idea? How is this helpful to have a ratio of 1 to, well, let's change that as well. There we go. Okay, so why do we need to even do it? And by the way, as I said since the beginning of the webinar, if there are any questions until this point, any questions, feel free to fire away, especially on the last bit of what we spoke now, which is a bit more advanced than what we did in the beginning. Okay, more profit than risk. Okay, that's It's a good answer. Anyone else? Okay, but if correct. So what Reggie wrote is if the stop loss is too close, it might not get to the profit. Okay, so in this scenario, again, this is why I did the red, maybe I'll switch to days real quick. This is why I did the red and the green. Of course, you guys don't have to do this, but this way it's easier for me to explain the areas, right? So I hear what you say. If the stop loss is too close, then of course it can trigger. But as you can see, if I'm zooming in, and I see that 290 is not a price that we saw for a week ago, right? So in this current scenario, if it gets more than it's a bit difficult to see. Let's maybe pinpoint with another price. Okay, so we see if we point on the candle, this particular candle, the high here is 289, right? And we see in here that it already triggered the price. So in this scenario, if it doesn't get to that price and it proceeds going down, we get the trigger. If it goes more than that price, that means that we no longer want to keep the position open because we suspect that it might go higher than that. All right, guys, so this is regarding what we did today. We learned how to compose a position with those ingredients, and we saw how we can construct it in a way that makes sense. The beauty about this technique is you can also erase the numbers that we have here and use the same system for any other instrument apart from currencies that are measured in pips. But the ingredients I wrote down is to help you construct a position from certain foundations and not to reinvent yourself every time you trade. This way I can take the 4 ingredients just like this and I can maybe paste it down like here and maybe delete this, delete this, delete this, and I'm good to move to my next one. Of course, I'm going to name also the name of the instrument and so on. Apart from that, the only last thing that I'm going to add for you today, guys, is to validate that we have the ability to take the position. How can we do this? As you can see, whoever is using the web trader does not need to do those calculations, but for MT4 and MT5 users, this is super helpful to better understand your financial ability in trading. How does this work? We can see that the price per unit in here for coffee is 282. Now, the number of units that we have here is 40. So number of units is 40. If we go price per unit times number of units, we get the value. Okay, we also have something called leverage. The leverage here is 1 to 10, and it multiplies buying and selling. In other words, what we can do is we can look at the leverage as a multiplier. So our 10,000 will have the ability as if we had 100,000 specifically for coffee and specifically for that lot size. That means that the leverage can vary. And if I would be looking at gold or Nasdaq or something else, it could have a different multiplier, a different leverage, okay? And since we're multiplied by 10, with the same logic, I noticed that the margin impact is 10% of the value. Okay, it's 10% of the value, and basically I can divide the value by the leverage to know how much free available margin I need. So value divided by leverage is margin impact. And margin impact is the necessary amount to open the position. Okay, guys, and obviously we can see that we're using less than 12% opening the position. So we, of course, have the ability to easily take it. Without the leverage, we wouldn't be able to. We would need 11,296. With the leverage, we only need 10% of that, which is displayed already. So for people who use MT4 and MT5, this is the calculation you need to do. For people who are using the web trader, it's already here. There is a Thomas here there is a question from Thomas. How will you actually know how to enter? Well, this is the analysis. You should consult with your senior account manager. This webinar is not a webinar for analysis. It's a webinar to first construct the position. This way you can use the analysis according to what we design in here. If we wouldn't write that all down, even if we analyze that coffee goes down, we wouldn't have any proportions. So with this, we have proportions, and on top of that, we can have technical and fundamental analysis. I hope it makes sense. Guys, for today, unfortunately, we ran out of time, so I appreciate everyone who joined us today. I hope that it was practical enough for you to pick up something that you can implement in your own strategy. And as I said, I'm sorry if some of the parts went too fast. You can find the recording on our YouTube channel. You can find the recording. I see that people keep asking, even though I said it, but that's great. That's wonderful. You can find the recording on our YouTube channel, and you can find a lot of useful content on our YouTube channel as well. Until then, I wish you all best of luck with trading. Have a fruitful week. Come join us next time and have a good day.